Monday morning, folks, and welcome to a brand new episode of the FINMET Mondays podcast. Joining us today is Sunil Kashyap, Director of FINMET, and also a very special guest, Ronan Manly, a renowned precious metals expert who joined the FINMET team very recently. Ronan, a very warm welcome to you on the podcast. Hope you're going to be a part of many more episodes in the weeks and months to come.
Thank you, Shawn, and I'm very excited to be here. And it's great to be with FinMet now.
Amazing. Glad to have you here as well. Last week was extremely volatile. We have come to see in both gold and silver specifically. Ronan, I'd like to understand your take about what transpired in the markets. We did see tariffs take shape and Trump announced them. Gold and silver were definitely exempt from it, but we did see a lot of price movements in relation to what has happened. What was your overall and general take on the developments from last week?
It's interesting that the all-time high in gold happened this week, and it came off slightly, but it still is acting as a safe haven. With silver, it's always more volatile, and silver, as you know, dropped from around 34 to less than 30. And that was probably because of realization that tariffs can lead to a trade war now, and because of the industrial component of silver, that could lead to a lower demand for silver. But because of the huge equity sell-off, it looks like across the board, hedge funds and institutions were forced into liquidating some of maybe their precious metals positions, including silver. So that could account for some of the dip in silver. But I think the long run story of gold and silver are still intact. Like gold is acting as a safe haven for geopolitical tensions, for potential trade wars, for higher inflation, and silver. There's a worldwide silver deficit, so that hasn't changed. So silver is always going to be very volatile, especially when the general markets are so volatile.
Sunil, is there something additional that you would like to add?
Yeah, no, just one thing, which is also, on Thursday and Friday, the EFPs collapsed. And so I think what that would mean is that we may start seeing metal coming out of New York. So a reversal of the flows that we've seen over the last 3 or 4 months. So the market should look out for physical metal coming out of New York and maybe being off in the Indian market, or at least in the London market at a cheaper price than it was purchased at.
Understood. Thanks a lot for that, Sunil. Our listeners are definitely interested to understand where the levels are going into the coming week. Let's quickly have a look at that. I'm currently looking at US spot gold on a daily time frame. We have two long-term trend lines that we have been observing. One is this massive blue line that we see here, which is right from 11th of April 2024. You see that gold tested and broke above this long blue trend line. You also have a short-term trend line in the form of this pinkish reddish trend line right here, which is also where gold tried to break above. Right? So you're seeing two long-term trend lines that gold tried to break above in the past week. And very quickly, as this was broken, you saw a bunch of sellers come in. You also had enough fundamental reasons, namely the non-farm payrolls for last week, which came in and showed that the jobs market is still very much robust and not declining, as was the case in Jan and Feb. And that was primarily the reason why gold wasn't able to sustain above these highs, and it broke down below. Now, what's interesting where gold broke down to is it immediately tested this purple trend line that you see here, which is a 20-day moving average. This is going to be a pivot point where we're going to observe for the coming week. If markets break this point, which is around 3,016 to 3,011, you're going to see a number of other supports going to be exposed. You have the first support here at the 50% retracement at 29.97. You have the next one at 38.2, which is at 29.58. And then you have one more at 23.6, which is 29.14. So you have multiple successive support lines waiting to be tested over here. And these are possible areas where gold might pick up in terms of buying action, and you might actually see gold bounce back from that. On the upside, there are two levels that we should watch out for. You have this higher that we tested recently, which is 31.67, which was the high of last week. You then have a higher at 32.15, which would be the next resistance. And then finally, you have a higher at 32.75. One of the talking points of the market is what's the high that we're probably going to see in this coming year? Technically, there is complete possibilities for gold to hit this level of 33.72, which has been derived from the Fibonacci retracements that you see here. This would, let's say, be the next high in terms of a long-term resistance that we would observe if gold is able to outstretch its bull run. Looking at next week, the summary is we need to observe this 20-day moving average trend line here right around 3030, 3000. If it breaks below that, you have the three successive supports that might be tested, but we are very likely to see gold remain elevated because all of the tariff wars that Ronan you mentioned about, and we might see gold bounce back into this range above 3100 even possibly. Thanks, Ronan. Thanks, Sunil, for that roundup. Let's see how the markets play out. Till then, thank you so much and goodbye.